Hi, it's Michael Farr from Farr, Miller and Washington. Markets have continued to be volatile this week. We've made some reasonable gains, but we're still standing in that 16,000 range on the Dow Jones Industrial Average. The 10-year Treasury is 1.77%. Oil has gone up a stronger week, $33.22. And the dollar has gotten stronger. We had a bit of a pullback in recent weeks, but it's rallied. It's a bit stronger now. 109 buys you a euro today, and some are still calling for parity, where a dollar would buy a euro. It would be a good time to go visit Europe. We did get up close to $1.40 for the euro, and actually over that in the not-too-distant past. So that's a pretty good discount if you want to go travel abroad. Oil prices are lower, so when you rent a car over there, the petrol will be cheaper. We've taken a look at oil versus the S&P. Going back to 2011, a regression analysis doesn't show that they're very closely linked. In fact, there's a measure called R squared. How closely are they correlated, or how much of the volatility in the S&P is actually correlated to oil? And let's say it's about 12% of the overall market, one-day market moves. That's going back to 2011. When we went to July 31st and we did the same daily trading regression analysis, that correlation has jumped to 24%. So in the past 6 months, the correlation between oil and the S&P has doubled. There are a lot of reasons as to why maybe, but mostly it strikes us as a psychological kind of a market indicator rather than a practical by-the-numbers driven indicator. So we are looking more at the broad economy. The price of goods came in, of goods bought today, was up 0.3%. That's the highest gain in prices paid over the past 3 years. That excludes food and energy, including, and if you look over the past 12 months, so that was 0.3% for the past month. That took the 12-month number to up 1.77%. We're getting closer to the Fed's 2% inflation target. If you include food and energy, remember that energy prices have been falling, up about 1.3%. So price gains are happening. Consumer spending was up 0.5% in January. That's the most in 8 months. So the Fed maybe has some more ammunition, I guess, more reasons to argue that they should perhaps increase rates so that they will have the wherewithal to do it. I do not expect that at the March meeting. I don't expect it before June. But economic data are continuing in a positive trend. The correlation with oil continues to be baffling, but a reallocation of risk continues to be underway where the high flyers and the higher riskier stocks, the FANG stocks, are not doing as well. Those that enjoyed those big gains are paying the price now. The good old tried and true big blue chips that we've been advocating for a long time are very comfortable places to be. Glad we own them, and I think there remains, there's still good value there. So, we're watching closely. Economic data improving. Market seems to be finding a level. We'll see. I don't think that this downturn is over with, but stay tuned. It is a fascinating time to be an investor, if a bit unsettling. If you're unsettled, give us a call at Farr, Miller in Washington. We'd love to help you. Hope you have a great weekend. Thanks for tuning in Washington, D.C. I'm Michael Farr.